time for the Sid and Julie Chase NoBull Money Hour. The next 60 minutes will be filled with information about real estate and alternative investment ideas, business news, the wealthy lifestyle, and entertainment. Now, here are your hosts for the show, Sid and Julie Chase.
Good morning, Myrtle Beach. You are at the right place at the right time. Thank you for joining us again this week.
Yes, thanks a lot. We appreciate everybody taking the time to get up early. Well, it's early for me. To listen.
It's their sleep-in day, usually.
It's a sleep-in day, yeah.
So thank you for getting up.
Every day is a sleep-in day for me.
No, it's not.
No? Okay. So where are we going to go into? What we talked about?
Yeah, what did we talk about last week? Yeah.
All right. What was it?
Reasons why people want to be financially wealthy, and basics you will need to start on your road to becoming financially wealthy.
That was a pretty good show.
Yeah.
We had a good time making that, and this week's we're gonna talk about.
Well, actually, let's tell them how they can find those shows if they missed it.
Yeah, I know.
Okay.
I just checking to see if you were awake.
If I was awake.
Yeah. So everybody thinks we're lost. We're not. I'm just testing her this morning. So you can find those shows at the Sid Chase
Investment Group on YouTube.
Yep. And you can go to the video section of either one of our Facebook pages.
That's right.
And you can click on them and find them there. But we prefer you to go to YouTube.
Yep.
Because you're going to hit the little red button that says subscribe. Yes. Because now that we've changed our page over from personal to business, YouTube has this new rule that says I have to have 100 subscribers to go live. I'm not quite there yet.
Because you're starting all over.
I'm starting all over. And you know how hard it is to get people to transfer from one YouTube page to the next? It was hard enough to get them to go to the first YouTube page. Crazy stuff. So what do we got?
All right, we're going to get started with the morning's market brief.
Morning market brief. It's expected that the Fed will leave rates unchanged in the next 2 months and possibly raise those in December.
Nice.
But I got the bat line, so I'm going to call into Yellen and tell her not to do it. I have a little bit of authority.
You do.
Not really. No. There's basically an 88% probability that she's going to do a probably 0.25% raise in December. Yeah.
It's been down for a while.
Until she gets the call from Trump. Now he has authority.
Yes.
Right. I still think I'm in that 22% bracket. I don't think they're going to raise.
In December, you don't think they're going to?
I don't think they're going to raise. No. We got too many. Economy's not. I mean, it's strong. It's doing good, but I don't think it's quite on all 8 legs yet.
Okay.
Yep. So
we shall see.
We shall see. You want to make a friendly bet on that?
Yeah.
Okay. Since my money's your money and your money's my money, I didn't say that right, but we'll go from there. Producers,
did say that right.
Yeah, I probably did say that right, didn't I? Producers' prices rose in September as gasoline prices jumped. Do you know why the gasoline prices jumped?
No.
Sure you do. Harvey and Irma.
Oh, well, yeah.
Because we're here in Myrtle Beach this morning as I stealth moded it down here to the radio station in the Corvette because I forgot something at the house. I had to run back and get it. And,
well, thank you for claiming they forgot that.
Yeah. No, I was not the last one at the computer. But anyways, gas here is $2.19 now. We're getting down there. We might just get back to $1.99.
That would be nice.
Yep, because we got some good news coming up, and I'm going to tell you why we're going to get to $1.99.
All right,
unless we have gas station gougers, and we do have a few of those.
We have a few of those occasionally. Yeah.
Yep. Okay.
Well, jobless claims dropped to a 1-month low, showing strength in the labor market.
Yep. So that's good.
Yep.
That's good. But the bad thing about that is. Okay. So that means there's less people to pick from.
Oh, yes, true.
Right?
Yeah.
Less quality people to pick from, So that can be a good thing. It can be a bad thing. It depends. Natural disasters continue to reduce inventory in already tight markets.
Yes.
So mostly Florida and California with the new fire that's going on. We just pray for those folks and think about those and guys that are going through all that. I think it's like 9.1 million houses are possibly at risk. That's a lot.
That is a lot. The buzz about net zero homes continues to build.
Net zero?
Yeah.
What the heck is net zero? Net zero
Well,
homes?
these are highly energy efficient homes. They're
Okay.
built highly energy efficient and they produce as much or more energy as they consume for heating and cooling per year.
So if I just thought about that for a second, it means I shouldn't have an energy bill
Right,
at the end of the year.
correct.
Wow.
Yeah.
Why aren't you building these homes? You build homes for a living.
I'm going to look into it.
You're gonna look into it? The truth of the matter, folks, is Sid is gonna look into it and then tell Julie yes or no, it's a good thing or a bad thing.
That's right.
'Cause
There you go.
Julie doesn't like to read very much.
No, I think we talked about that
Yeah, we did
last
talk
week.
about that
The
last
week
week.
before.
Yep. The number of unfilled jobs in construction continued to rise in August
To the highest level since
Since
February 2007.
2007. Yeah.
That's pretty
Home
awesome.
builders added over 80,000 jobs though in the last year. So that doesn't make any sense. We just kind of,
No?
nope. Well, think about what you said, right? You said that the number of unfilled jobs in construction rose in August again, right?
Mhm.
But home builders, which are construction,
Yes.
right, added over 80,000 new jobs for the year.
Mhm.
Well, you know why, though there's a discrepancy there?
Why?
Is because we're building faster than we're hiring people.
Gotcha.
And because that unemployment rate is low,
Mhm.
we don't have anybody to hire.
To pull from. Yeah.
Do
Got
not,
you.
do not build the wall. We need more employees. We need more people to hire,
Yes.
right? So at least put a big door on it if you're gonna do it. Right? Well, no, seriously, I mean, I'm being funny about it a little bit, but if you really think about it, look, I'm all for something about the wall. I'm not sure about a wall, but something. But, you know, prices are gonna continue to go up on housing
Mhm.
and on the labor side. You know, they're already going up on material side, you know.
Yes.
But on the labor side. So if we don't have enough workers, they're gonna continue to go up because the workers that we have now are just gonna continue to raise their prices because, you know, they think they
That's
got us
right.
by the you-know-whats, which kind of they do,
Mhm.
you know, but, because there's nobody running from Canada over here.
No. I
So
don't
we
know
only
why.
got,
It's
we
about
only
to
got
get
to
really
work
cold
with the
up
South.
there.
You know, they might be as cold as it's gonna be, right. So, what's going on, what happened
Well, the
this
same
week?
weekly report's coming out this week.
Yep, so the housing market index, housing starts, petroleum status report, the EIA, petroleum and gasoline reports
Yes,
come out this
yeah.
week. Jobless
Jobless
claims
claims.
again, which comes out every single week.
Existing home
And
sales.
existing home sales this week, and
Yeah.
the Baker Hughes rig count for oil
Yeah, that's
is
all
on Friday.
same
Always
weekly
on Friday.
stuff.
Yeah, it's all the same stuff, and as
Yeah.
we said, if there's anything, big
Yeah.
things, we'll
Drastic.
announce it, but, you know, Wall Street's really kind of boring.
Yeah.
It really is.
So why
It's
do
the
you
same
keep talking
stuff.
about it?
It's the same stuff every single week. You know, if things go up, things go down. Yeah. But if you watch CNBC or any of those Bloomberg or any, they like every minute they're talking hype, hype. Look, Ed, this past week, he listened to CNBC. So we have a special guest today, Tito, though. I'm going to
Yes,
go
we
back
do.
to what I was just saying, but our special guest is going to clear this up for us now. The statement that I'm about to make right now. So CNBC talks about this stock or that stock. Jim Cramer says, you know, buy, right? So this guy that I know, Ed, who's worth a whole lot of money, he listens to CNBC and turns right around and buys the stock based on what they said on the air.
Really?
Yeah,
Wow.
so he bought a stock at $76, and I don't remember the time frame. Wasn't very long, less than a year, and he ended up selling it at like $2.56 or something like
What,
that.
what
He
did you
said
buy it at?
$77,
Ooh,
right?
that's a loss.
That's a big, yeah, and
Very good.
that's a big loss. And yeah, you could be a financial planner, right?
Not.
But anyways, so what else?
Last week.
Last week, jobs claims, natural gas storage rose 87 billion cubic feet for natural gas. It rose. So that's a 28 consecutive weekly
That's great. Increase.
increases.
Mm-hmm. Cut you off.
Yep. Crude oil fell 2.7 million barrels in October. But most of that is because of the storm, you know, Irma,
Yeah.
Harvey,
Right.
and anybody else that we have that I don't know of. But that's really what that is. But we're starting to see that come down at the pumps a little bit. So
That's good.
retail sales across the board are up. Economy is still going strong.
Yeah,
Right.
that's good.
Good and strong.
That's good.
Right. So I don't think Yellen is going to do her thing. I don't think
I
so.
hope you're right.
Yep.
So coming up in Myrtle Beach,
This is you.
this is me.
Yeah.
It's coming up in Myrtle Beach, October 17th, the 34th annual Taste of the Town at the Myrtle Beach Convention Center. This is known as Grand Strand's largest culinary and social event of the year. We've been there a few times.
We have?
Yeah,
Okay.
we went with Val and Frank.
Yes, we did.
Yeah. It was a lot of fun. Good food.
It was awesome.
October 19th, 20th, and 21st, the Conway Ghost Walk. It's on Main Street in Conway, and there's professional storytellers.
Where we go?
No.
Okay.
October 21st, at the Grand Strand Halloween Fest at the X Gym Sports Mall from 10 a.m. to 3 p.m. Trick-or-treating, vendors, photo booth, glitter tattoos, costume contest, crafts, bounce house, balloon art, face painting, and much more.
Yeah, now, if Missa heard you say that, she's going to run right into the daddy's room, wake him up, and tell him we got to go to the X Gym. That's what she's going to do.
Yes,
Right?
yeah.
Yep. So,
We're gonna take a
what
short
are we
break.
Yeah, I know we are, but what
Okay.
are we doing for Halloween?
Oh, we're going to the Broadway at the beach.
Broadway at the beach?
It's our little traditional thing.
Yep, we get there about 10:30 at night.
We-
If you
we
have
people
never
watch.
been, folks, it's a people watching show.
Yeah.
We don't dress up or anything.
No.
We don't need to. Everybody else does it. A couple of years ago, I remember it was really cold, and
Yes.
you had those
And
college,
baby Huey was very popular
very
then.
popular,
So.
Baby Huey. So we had these adult college students running around in Baby Huey costumes with a little diaper on and a little
Little
whatever
sneakers.
that- sneakers.
It was
Pacifier.
very, very cold.
pacifier. Yep. So that's what we do. That's our tradition. We've been doing it
Yeah.
for 7 years, just about every 7 years.
It's a good time.
Yep, it's a good time. So come down and join us. We'll be there about 10:30 at night at Fat Tuesdays first.
Yep.
Get our Frosties.
Mhm.
And then we go over to, I think it's Charlie's, and have another drink.
Charlie's on the
and
corner left?
Charlie's is on the corner, and
Yeah,
next to
I think so.
Senor Frogs.
Yes, yeah.
We go over there about 11:30 or 12 and have a little appetizer.
And people watch.
And people watch again,
Mhm.
right?
It's a good time. So we're going to take a short break, and when we come back, we are going to talk with our financial advisor.
Yes, we are. Let's get your questions ready.
Took you a second to get going.
Sorry about that, folks.
More than 17 years
I had no coffee this morning.
delivers high-quality bread.
I don't know what I was doing there. No.
They all have one common interest, the passion for home.
Okay.
And a commitment to the homeowner.
Doesn't have a
With
face.
online client
Okay.
access, you'll love
That's gonna
building
be
your
hard.
new
And
home.
those people there went for a ride this morning.
What happened there?
I'm not sure. I think your
Did Chrissy just throw her
I think your
arms?
assistant hit it.
Right.
Minor earthquake.
Minor earthquake.
It's all right.
It's all good. It's all good, folks. Who we got on, Lexi? Who we got on everywhere? I can't
Artie
see.
was on,
Who?
Brian Logan. Artie and Brian Logan.
Hey, Mr. Artie Green.
Morning, Artie.
And which
Hi,
Logan's on?
Brian.
Brian, cuz, what's happening, buddy? Are you in New York or are you traveling somewhere in Alaska still on your motorcycle? Where are you at, brother?
Gross.
Yeah, my cousin's got a rough life. Yeah, I should have married his wife.
Yeah, right.
'Cause he don't work
Right.
at all, and she does.
Yes,
Well,
he does.
He just did like, God, I think he spent 30, 40 days on the road on his motorcycle, did a whole Alaska tour, upper north, upper country, the U.S. And yeah, he's got a blessed life, man. He has no clue how good he's got it.
That's gorgeous. That's gorgeous country up there too, man.
It is. It is. Yep. We're back.
Money Hour on Hot Talk 99.5.
Welcome back, everybody.
Yes, welcome back. Let's talk about some things you can do with the Sid Chase Investment Group.
Yes.
We are a consulting firm. We talk about, well, we don't talk about it, but we help you guide you in your real estate investing or alternative investments. And if you are looking to get started in real estate, so maybe you've only done a couple of deals or maybe no deals at all, and you want to get started.
Need some
whether-
guidance.
Yep, we need some guidance, whether you want to be an active or passive, either side of the fence, we can help you with that. And so you could give us a call. Contact us. All of that information will be at the end of the show, or you can find us at sidchase.com.
And that's SYD,
Sydney.
Sydney, Australia.
Yeah, so sidchase.com.
All right, we have a special guest today.
Tim White.
Tim White is his name.
Is
yes.
it?
Yeah.
Right. He's a financial planner from
Edward
Edward
Jones.
James. Yeah,
Edward James.
Edward James.
That's what you
I
said.
always say Edward James. I don't know why. It just sounds better.
Yeah.
Why didn't they say Edward James?
Because that wasn't his name, mostly.
Okay. Well, my friend, the rock singer Jasmine Kane. That's not her name.
Well, hey, I don't know. Maybe it works different in the music business than it does in the
Yeah.
financial business.
I knew where he was from. It was like, Joe and Sarah go again. Edward
Comedian.
Jones. Right. So Tim, thanks for joining us today. You had a long drive down, right?
An hour drive.
An hour drive?
Not too bad.
And you have your assistant with you. She won't do much talking today. Did she drive or?
She drove for part of it, and I drove for part of it. Yeah, she helped me out
Nice.
this morning.
That's
So
nice.
my assistant being my lovely wife, of
Yes.
course. Yes.
So tell us a little bit about yourself. So I know we've been friends for probably over a year or so now.
Mhm.
We met in Wilmington for the documentary on a film that we were working on
Mhm.
together. And I know you did some military time,
hmm
right? And Army.
Yep, Army 82nd Airborne Division, just like you, my friend.
Yep, we were two people that jumped out of perfectly good
I
airplane.
have
That's
a question
correct.
about
That's
that.
correct.
Was your first jump a night jump?
No,
He's bull crapping.
no. Yeah.
This is Sid's description of his first jump being a night jump.
I guarantee
His
it.
eyes
I
were
guarantee
closed.
it was.
Oh, okay. I understand.
Thank you very much,
Yeah.
folks.
Yep. Ba-da-bum-bum.
Exactly. So, how long you spend in the military?
5 years.
5 years.
And then I met my wife, and she made me get out. So that
I
was-
believe that. I believe that. I did 15. Had 2 splits though. I did 7 the first time around, out for 12, and then I came back in, did 8 more.
Nice.
So, not at all.
No,
No, actually, it was.
God bless you, Sid.
It
God
was
bless you.
no, it was good.
Yeah.
I appreciate everything that the military did for me, and it helped mold the person that I am in
Yes.
today.
Mhm.
So,
Absolutely.
Yep,
It
so-
will do that. That is a fact.
yes,
Yes.
yes.
Yeah.
So tell us what else. Where are you originally from? How did you get where you're at today with Edward Jones?
Edward Jones, yes. Well, originally from a small town called Litchfield, New Hampshire, which southern New Hampshire near Manchester. Came to the Carolinas originally by way of the military. So was stationed out at Fort Bragg when I met my wife, who was going to school at NC State. She met me after I just got back from a deployment. And I had great plans that I was going to re-enlist until, like I said, she said, hey, you can do that if you want to, but you sign that contract, go ahead and forget my name and lose my number, because I do not want any part of being a military wife. So I got out, and after she graduated from school, my wife's name's Christy, by the way. I don't think I've said that yet. But after she
Is
graduated,
that her real name?
that is that's her on-air name. After she graduated from college, she moved up to the Northeast with me in Massachusetts, and she did 2 winters up there, and decided that was that was
Not
not
her
going to
cup
work.
of tea.
That was not going to
Two
work.
winners. Like that was a tour or something.
Right, yeah,
It probably was like a tour for her.
So we came back to the Carolinas in 2008, up in Southport, North Carolina, it's just south of Wilmington. And when I first got here, I did contract security work for nuclear plants. Basically, I would travel around and do threat assessments and train security staffs, and then I had you remember Op 4 or Opposition Force that
Yes.
would train you guys. Basically, we were Op 4 for the
Yep.
nuclear plants, and I would try to, my team would try to break in and make sure that they could stop us, basically.
Right. So because
Oh,
of
that's
Hillary
cool.
and because of Obama, you lost your job. And I'm just speeding up the conversation.
Right.
So you lost your job.
No.
I get that.
No.
And then you went straight into financial planning.
All right,
I'm
so-
not really sure how that connects.
So,
got
so
made.
the transition here is basically when I got my contract job and my wife was working actually at a nuclear plant at the same time, that was the first year we ever made, good money, right? Because obviously when you're in the service, and I was an enlisted guy myself, that you don't exactly get paid a lot.
Not until you're about E7 with 15 years
Right,
in.
correct. Which I didn't get to your status, my friend. So with that, when we did our tax in 2009, I realized between state and federal, I paid almost 40% in taxes.
Ouch.
Yes,
Ooh.
and this was obviously right after the 2008 elections, where all the
Who won that?
yeah, we don't have to go back over old stuff, but
And no politics, Sydney.
but basically our presidential candidates came out that they paid 26% or less in taxes. So I said to myself, well, how does this work? Okay,
Yeah.
shame on me for not knowing. Good for them. They obviously know how the game works. I need to figure it out myself. So I used my 9/11 Montgomery GI Bill to go to school. Went to school for accounting, and obviously I figured out one of those ways that they could keep their tax liability so low is from investing, because capital gains was taxed max at 15% at the time, no matter how much you made. So I was like, oh shoot, I guess I need to learn how to invest. So on top of going to school and still working my full-time job, I would do hours of research. It drove my wife nuts. She thought it was crazy. She said, I'm doing hours of research a day. And then it got to the point, when you get a bunch of information and you think what do you want to do? You want to share it with people, right? You're like,
Yes.
oh, you guys got to know this. Like now
Yes.
I feel like I've read the playbook and that wasn't available to me before. So we'd be at like a grocery store or something like that, and I'd overhear a conversation, and of course I'd have to butt right in and say, hey, do you know how you can really help yourself out in this particular... So,
Sounds like you.
yeah. So my wife didn't like me traveling around to different nuclear plants, didn't like me being gone anyway, and she said, hey, you obviously have a passion to do this. Why don't you look into doing this for a living? You're giving out all this advice. You might as well get, paid for it.
Yeah. She
So
sounds like a very smart lady.
she is. She's a very smart lady.
She obviously had a lapse when she said I do. But other than that,
We all have that one mental digit every now and then. So I did. So I started to look into financial firms and have to offer our special mutual funds. We get paid more to do this. We just try to make sure we're always putting a round peg in a round hole. Is really all it is. So it was the perfect fit for me. And not only that, they looked at military service and a guy like me that didn't really have this outstanding financial background to go.
but you knew how to show up on time.
I knew how to show up on time.
You knew how to
and-
read a
and-
book.
and they knew that I could read a book. They knew I was trainable. And
Right.
the biggest thing.
Well, that's
is-
how the Army
Right.
teaches us. We don't need to know anything in the military. We just need to know where to go to look it up.
Exactly.
Right.
So Edward Jones knows
almost
that.
every test. Almost every test in the military. I mean, you take your NCO classes. Your ANOC, your BNOCs, any of those, and they're all open book tests, literally. And it's you read the question and you go to the book, you find it, and then you fill it out. That's exactly
As long as
how
you're
it works.
proficient at looking up the answer
That's right.
in a timely fashion,
That's right.
you'll do okay.
Yep.
Gotcha.
So yeah, they know that, and they know, generally speaking, hey, this guy's going to at least try to do the right thing for
Right.
our investors and our clients. So
Great.
that's a good fit. So
Yep.
so that's how I'm at where I'm at.
Okay, so for the person who's just getting started in investing, 20, maybe just got out of college, 24, 25, 26
Sure.
years old,
Yeah.
what should they do to get started? What's the very first thing they should get going on?
Yeah.
I hope you're in line with us, but go ahead. We
I hope
forgot
so.
to go over
Right.
that before the
Yeah,
show.
right. I'm supposed to say real estate or using a financial professional. So you want to look at, obviously, what type of investment accounts are available to you depending on where you work. If you have a 401k plan at work, you obviously want to make sure you contribute to that, especially if they match.
Yes.
Don't leave free money on the
Yeah,
table.
but and then we say that too. Only put in what they're going to match, and then after that, the rest would go
The
where?
rest would go into either, depending on your situation, a self-directed either IRA or Roth IRA. And obviously you want to I work directly with your tax professional on that to figure out what's the best for your situation.
Now, self-directed IRAs are, if I remember correctly, are more geared towards people that are in business for themselves.
Not necessarily.
Okay.
All self-directed means is that you have control over what you invest in the IRA.
Okay.
So, meaning I can pick any stock I want to, I can pick any mutual fund I want to, I can do individual bonds if I want to. If as
And
opposed
you know what
to
I'm thinking about? I'm thinking about SEP IRAs.
That's
That's
exactly
what I'm thinking
that's
about.
correct.
Yep. Self-directed
That's
IRA. That's right. Yep.
So having that conversation, like I said, figuring out if you want to do it yourself, because that is of course an option. And I tell everybody, hey, if you got the time, the tools, and the knowledge, you can do anything. You can do your own plumbing yourself. You can fix your own car yourself. You know, it's not different with planning your financial future.
Right.
Or figuring out if, hey, you know what, I don't have one of those three things, so maybe I should go talk to a financial professional.
And I know when they're coming in talking to you and they're new like that, even before you go into all that stuff with them, you're going to talk to them about making sure they have an emergency fund set up and a living fund set up, so that maybe they have 3 to 6 months.
3 to 6 months,
expenses,
always.
And then your emergency fund that we preach that here too.
Yeah.
Maybe 1,000 up to 5,000 depending, and so they can use those things if the car breaks down or the washer and dryer goes on the fritz, things like that. You don't have to charge it to your credit card type things.
Absolutely.
Yep. And real quick here, we are on Facebook on both, and Twitter. I think we're Twitter this morning. Hi, Twitter folks. Hey, if anybody's got any questions, lawyers, you're like all over the place.
I would like to think we're not that bad, but yes, there's definitely some important things to look for. First and foremost, of course, you want to make sure whoever you're working with has the proper credentials.
Right. So is that like somebody who, now I'm not quite sure about this, but so does that mean somebody who is fiduciary, or, because I think there is fiduciary advisors and then there's non-fiduciary,
Correct.
if I'm saying that correctly?
Yes,
Right.
correct. So, and I like to sum it up a little bit easier. There's advisors and planners, and then there's brokers.
Got it.
So basically, if you're talking to and there's a big difference between the two. If you're talking to a stockbroker, he's just making the trades for
Right.
you. He's just saying, hey, I think this is a good stock pick. Now, if you're talking to an advisor, we're looking at the whole picture. We're figuring out the reason why we own a stock, a mutual fund, a bond, a real estate investment trust, whatever, before we're coming up with the full plan. So what I want to know is, what are our long-term financial goals, right? What is your comfort level with the risk in the market, with the ups and downs in the market, before we get into anything? Because I can tell you something's a good investment all day long, but if you're not comfortable with how far up and down it goes, it doesn't matter, because the biggest thing with investing is being able to stay invested.
Right. He had retired from Verizon as one of their top guys there, and which still baffles me today. But he was one of the top guys there, and he lost like a lot, more than half, during that 8-9 year downturn we had, roughly that long. And he kept saying to me, "I got to sell it. I'm going to sell it. I'm just going to sell it." I said, "Don't sell it. Just, you've had it this long. Hold it on. If you sell it, it's gone.
Right.
That's it. You've
actualized the loss.
Right. You've unplugged. And so now today he's up and past, got all his money back, and now he's doing all right again.
Good for him.
So yep. If a person has multiple accounts, like 401k or an IRA, either one of those, where would they? How would they, or why would they want to consolidate?
Good question. Because the buzzword, of course, is diversification, right? And that's when we're talking about a portfolio. So a lot of people will think, hey, if I should diversify my investments, maybe I should diversify who my financial providers are. But there's a lot of reasons why you would want to consolidate. One, of course, being so that you know where everything is. I can't tell you how many people I meet and I talk to that have old 401ks and they're not sure what it's actually even invested in or what it's doing. So getting something on the same sheet of music to let you know exactly how you're invested and how risky you're invested is crucial. Two, it can help consolidate some fees. It can actually help save you some money, because you could have annual fees that you're getting charged in all these different accounts. So if you have 4 different accounts, you have 4 different annual fees, as opposed to consolidating, have all the assets at one spot, and that can save you some fees as well. Also, especially, I know for me, if I've got everything in one spot and we're coming up with a plan together, of course, you're going to get the best result if we have everything on that same sheet of music so that we can come up with that plan for you. I know what your tolerance for risk is. I know how to develop that with you. So it's crucial, I think, that you know where
He said he's about 8 months away from retirement.
Okay.
So what things should he be looking at this point?
Good. Yeah.
And I know that's a loaded question because you don't know where he's at this
Definitely,
point.
yeah.
In a general answer, what are some of the things that he needs to take into consideration at this point?
Good.
The first thing I told him when he asked me was have his wife get a second job. that was the first thing I
absolutely.
said.
One of the first things that he could do actually when we're that close out, when we're 5 years and closer into retirement, first thing we want to do, go to ssa.gov. Know what your Social Security benefits are gonna be so that we know how to plan where we're going to take money from.
And what was that again?
ssa.gov.
SSA.gov.
Correct. So we want to sit down, of course, and look at the portfolio, figure out how we're going to generate retirement income. Or do you have a pension? Like I said, what are we going to get from Social Security? Do we want to start collecting at 62? Do we want to wait until we're 67? Maybe we want to try to wait until we're 70. Do I have any health concerns? That's one of the biggest things right before retirement, of course, that we want to look at. Hey, are we retiring at 65 so we get Medicare, or are we going to have a 3-year gap here where I'm going to have to pay health insurance out of my pocket? If I am going to retire at 65 and get Medicare, do I need to look into getting some type of supplemental policy?
Like the duck?
Right. No, not like the duck.
Okay, he's not a duck. What is he? He's a duck.
Well, yes, but
Aflac is not
I
a
don't know.
supplemental.
I don't know if I
You
can
can say
him.
whatever you want.
Okay.
This is my show.
But that's a different type of supplemental insurance, not
Yeah.
Medicare supplement insurance.
Well, I see. We need to clarify that.
Yeah. Yep. Absolutely. So in his case, I feel like that's a long answer to your question.
No, that's fine. That's fine because it just drove me to think of a couple other things to ask you.
Okay, good.
Most of the time, what you hear from financial advisors, doesn't matter where they work for, who they work for.
Sure.
When you hit that 64, 65, 67, whatever that number is that you're going to be retiring at, or you're a year away from it, they tend to want to start putting you in less risk portfolios.
Sure.
And I am 100% against that. I think that's BS, actually. When I say that, let me clarify a little bit in saying maybe half of what you have should go to a safer road, on a safer road. But I think you still need to be aggressive in your later years to continue to bring money in. I mean, most people try to live on 4% or 5% of what they have.
Sure.
Our philosophy is to, throughout the years, you should try to be building a minimum of 7 different other streams of income coming in. We know some of your most wealthiest people have up to 70 of those. So why is that you guys do that? Now I'm putting you on the spot. I am, but this is what we're here for, though.
Yeah, absolutely.
I'm not trying to be rude.
No,
we're
absolutely.
friends, we're brothers, and from different mothers, but we are brothers.
No doubt.
But I don't get that.
Sure. You say you guys, and
I'm putting you all in one
right.
big
You're
kitty.
right, lumping us all. But I happen to agree that you always have to have some growth investments. Sure, you want to take a portion of what you have in your portfolio and basically put that into, either bonds or something safer, maybe some guaranteed income, maybe some annuity. But there's always got to be a portion of it that is in growth investments. Why? Of course, we have to keep up with inflation. So if we're just getting which right now, interest rates, as we know, are nothing on bonds. If we're just getting a 2.5%, 3% interest payment on our bond, which our bond payment is not going to give us raises. Okay?
Correct.
Stocks will.
Correct.
So it's important to incorporate all of these things together as far as we want some dividend paying stocks. We want dividend-paying stocks that don't just pay a good dividend, but also have a history of increasing their dividends.
Right. So for us, real quick, what we do, because we do that, we have dividend stocks, and that's I'm a dividend person. I believe in dividend stocks more than mutual funds or anything else, actually. And so we look at ones that have raised their dividends and have a growth in the revenue, raising revenue, still growth revenue in the company for a minimum of 10 years.
Right. Good. That's a really good philosophy. And actually, typically speaking, for my clients that I know, this is part of the big part of their income in retirement in their portfolio. I'm looking actually for 20 years or more.
Okay.
Because I can build a really good, what we call a dividend aristocrat portfolio for somebody using there's actually a lot more out there than you would think.
Right.
Just really good, high quality companies, again, that have been shown a commitment to their investors to pay them out dividends, and not just pay them, but give them an annual raise, which is, of course, what we need in retirement so that we don't run out of money. Hey, I might be able to live off of, say, $50,000 a year right now, but 10 years from now, that's not going to cut it.
Right.
So we have to make sure that, so that's, I guess, to your original point there, no, we can't just go all conservative when we hit close to or near retirement. It doesn't work that way. You have to balance it out, and yes, as we get older, maybe we'll put more and more into that conservative bucket, but there's always got to be something in some growth sectors so that we can keep up with inflation. And it's just understanding that we're going to do that. So yes, we are, if anybody tells you that we're going to guarantee gains every year or anything like that, that's just not being forthright and truthful. Yes, that means that you're going to have a little bit more portfolio volatility. So that's what you have to talk about up front to understand an individual's comfort level. Your comfort level with the ups and downs of the market, it seems like you'd be more okay because you're like, okay, I'm long term, I get it. But someone else will say, your wife, for instance, hey, if I go down 15% in my portfolio, oh, I'm getting Ajahn.
Try 2%.
Yeah. She has a reaction like your brother, and it's like, oh my gosh.
We're invested in real estate.
Yep.
And so, we've been doing it for over 25 years. So I know real estate almost as well as I've been married for 27 years. So I know her. So I can control it.
Yeah.
I can feel it. I know what I'm going to make every year pretty much.
You like the hard asset.
Right. And so I think that, with this Jobs Act that came out a few years ago that Obama signed, I hated saying that, but that's good. He did a good job. It's benefited a lot of people that are coming into that retirement.
Yeah.
Because now they got it pretty much all worked out. So there's actually crowdfunding platforms out there now that you can get involved in these alternative types of investments.
Right.
So my question was, and normally they pay higher.
Yes.
And if you are with somebody who knows what they're doing and been around a long time, the risk isn't there. There's not as much risk. So do you, and I don't want to get you in trouble here, but do you believe that somebody should keep 5 or 7 or 10% of their portfolio in an alternative investment, even though they're a year or maybe now into retirement?
Sure. And the answer to that is it depends on really how savvy you are. So if we've got the portfolio working as it should, and I believe in real estate, well, part of what I call the trinity of when we retire is stocks, bonds, and real estate investment trusts, where we're going to get income from. REITs, exactly. And as you know, there's multiple kinds of REITs. We have REITs that actually own the commercial buildings themselves, and then we have the mortgage REITs, which are known to be a little bit more riskier than, but of course they pay the higher dividends, the higher income.
Right.
So we can go about it that way, actually just own the REITs. Or if you want to get more involved and you are a little bit, savvier and have the time, like I said, time, the tools, and knowledge, you can do anything. Right. I'm saying, hey, if that's what you want to do, I'm not telling you no. I'm not saying it's a bad idea.
Right.
It's just not for everybody.
Correct. No, it isn't. What I was just going to add to that was, I don't remember. Let's take a short break, and we'll be right back with some more.